a long time, reverse mortgages have had a bad reputation, and therefore they've been maligned, misrepresented, underutilized, but it's a powerful retirement tool. And what we're seeing, Chantel and Tony, is today's savvy retirees are sophisticated, well-read, proactive. They do their homework, and they're finding that reverse mortgages aren't for broke or desperate people. So what I ask people, listen, if there were a proven resource that's been around for over 60 years that allowed you to increase your cash flow, reduce your retirement risk, preserve your assets, improve liquidity, add new dollars back into your retirement savings tax-free, would you want to learn about it?
I think that also, yes. Let me step one step further. How is that benefiting the person who's already rich, who has a $10 million house? How does reverse mortgage help that person?
Yeah, that's a great question. So what I find a lot of times, Chantel and Tony, with wealthy people, they don't have that many options for tax-free retirement. There's really only 4: Roth IRA, permanent life insurance that's properly structured, health savings account, and reverse mortgage. And what I find is when they have their home paid for or a lot of equity in their home, their equity is earning 0 return on investment. It drives them crazy. And they can't access their equity without a mandatory monthly mortgage payment, either a HELOC or a monthly payment. So what we do is we help them get a reverse mortgage line of credit where they can access on a $10 million property up to $4 million in home equity. There's no restriction on how they can use their funds. So some people buy a second home, some people help their kids, or grandkids, or help charity. So basically, it's wide open how they can use the money. They might buy a new business or whatever. But the point is they can unlock or unfreeze that equity and use it however they wish.
Well, let's go into a little more detail about that. What are some of the things they can and cannot do with that reverse mortgage?
Really, the only restriction they have is they can't purchase an annuity, because in effect, they're already annuitizing their home equity, right? They can turn it into monthly payments, line of credit, or they can get a lump sum. So as long as somebody's 55 years or older, they can convert a portion of their equity from their primary residence into tax-free dollars. The other thing that's important to note is these loans are non-recourse loans. And what that means is basically the borrower is shifting responsibility of repayment from themselves to the home. The only recourse the lender has to recover their funds is against the house, not the homeowner.